Navigating same-day business cash advances through expert guidance. Same-day business cash advance is the quickest solution for businesses facing urgent financial needs, providing immediate funds for operational expenses. Running a small business often means dealing with cash flow ups and downs. An unexpected expense or temporary shortfall in revenue can leave you scrambling to cover costs. While getting a loan from a traditional lender may take weeks or months, newer alternative lending options like merchant cash advances can put money in your account the same day you apply. We'll explain what a same-day business cash advance is, why you may need one for your company, and how to choose the best lending partner and loan terms for your situation. You'll learn the pros and cons to weigh when considering a fast business funding option, as well as tips to use it strategically. What is a same-day business cash advance? A small business cash advance, also referred to as a merchant cash advance, MCA, provides an upfront lump sum of capital in exchange for a percentage of future credit card and/or debit card sales. The amount advanced is typically based on your average monthly card processing volume. Unlike a term loan, an MCA has no set repayment schedule. Daily or weekly payments taken automatically as a percentage of sales approval, often within 24 hours. Funding in as little as 48 hours. This flexibility and speed makes MCAs helpful when you need access to working capital fast. However, the costs are also higher than conventional financing. Key features: amounts from $5,000 up to $500, 000 plus approvals in 1 day, funding in as little as 2 days, fixed percentage deductions from daily, weekly card sales, no collateral required. A same-day business cash advance gives you quick access to capital based on the strength of your business's revenues rather than your personal credit score or available collateral. Payments adjust up or down based on your sales volume. How do MCAs compare to payday loans? Payday loans allow both consumers and business owners to borrow a small amount of money, usually less than $1,000. The loans typically carry very high interest rates and fees and come due on your next payday, often in 4 weeks. Here's an example to show the difference. Payday loan amount: $500 interest rate, $15 per $100 borrowed. Term: 14 days. Total repayment: $575 compared to MCA. Amount: $10,000 factor. Rate: 1.3 holdback percentage. 10% term. 9 months. Total repayment: $13,000. While they both offer fast funding, payday loans provide lower dollar amounts, carry higher equivalent APRs, have fixed repayment dates, are regulated differently by states. Top 5 situations where a same-day business cash advance can help below are some of the most common scenarios where getting quick funding from an MCA may make sense for your startup or small business. 1. Covering payroll during slow seasons. Making payroll should be a top priority, even when revenues dip temporarily. Having funds on hand ensures your team still gets paid on time. 2. Purchasing inventory to fulfill orders. Running out of inventory stalls growth. Access to capital to replenish stock allows you to meet customer demand. 3. Expanding marketing efforts. With some working capital for paid ads, content development, or brand awareness campaigns, you can fuel new customer acquisition. 4. Hiring to keep up with rapid growth. Bringing on more staff helps manage increased sales volume flowing into your business. 5. Paying taxes or other essential expenses. Whether it's taxes, licenses, utilities, or service fees, covering essential expenses ensures seamless business operations. While an MCA won't be the best fit for long-term investments like equipment purchases, it can be a quick fix or stopgap solution for more immediate needs. How do I qualify for same-day financing? Approval for an MCA depends more on the health of your business than your credit score. Many alternative lenders are willing to work with younger companies and lower credit scores. Here is what they assess to qualify your eligibility. Time in business. Most lenders require at least 12 months. Credit score. Minimum of 500 plus, but often no minimum. Annual revenue. Some look for $75K, $100K plus in annual sales. Daily card sales. Brokers look for at least $2,500 a month. Valid business license. Should be registered and compliant in your state. Active business bank account. Up to 6 months of recent bank statements. What are the typical rates, terms, and fees? Costs vary between providers, but here are general guidelines on MCA rates and terms. Factor rates, usually 1.1, 1.5x the amount advanced. For example, $100K advance repaid at 1.4x means you pay back $140,000. Term length, typically 12 months. Payment deduction percentage ranges from 8%-15%. If your daily card sales are $1,000 and you agree to 10% holdback, $100 will be deducted and go towards repaying the MCA origination and underwriting fees. Can be 1.3% of the amount financed, beyond the higher equivalent APRs compared to traditional SBA loans and lines of credit. It's also key to understand. The shorter the term, the higher your daily deduction percentage will be. There are often prepayment penalties if repaid early. If card volume declines, the repayment period gets extended. Be sure to consult a trusted business finance advisor to negotiate the best possible rates and terms for your situation before signing any contract. 7 mistakes to avoid with same-day business cash advances. While MCAs offer a viable short-term lending solution for many companies, they also come with risks if not used strategically. Here are some key mistakes to avoid. 1. Failing to budget for the payback. Not accurately forecasting the impact on your cash flow means struggling to make daily payments. Always model different scenarios to size the financing responsibly. 2. Using the capital for non-essential expenses. Don't waste valuable working capital that comes at a premium. Reserve funds only for true emergency needs. 3. Not having a clear repayment plan. Establish a timeline for when you will pay the MCA off to avoid an endless cycle of renewing the loan. 4. Taking out more than one MCA at a time. Too many payment deductions sinking your cash flow makes your situation worse. Avoid stacking obligations. 5. Relying on MCAs as your only financing option. Explore business credit cards, lines of credit, and term loans, in addition to merchant cash advances where possible for more diversity of funding. 6. Not reviewing the fine print carefully. Scrutinize all MCA terms to catch hidden fees and ensure you fully understand personal liability in a worst-case default scenario. 7. Working with a disreputable lender. Only partner with trusted, verified MCA companies and brokers that offer transparent terms and fair rates. How does the application and funding process work? One of the main appeals of a merchant cash advance is the quick and straightforward application process. Here are the typical steps. 1. Determine eligibility. Before applying, broker websites often feature a simple eligibility quiz to give you an initial yes or no on qualification. 2. Fill out the application. Next, complete a basic one-page application, either on the lender's website or through a loan brokerage platform. 3. Provide supporting documentation. After the initial application, you will need to submit documents like recent bank statements, credit card, processor statements, existing debts, liabilities, proof of business registration, tax returns, profit and loss statement. 4. Get approved. Underwriters usually provide an approval decision within 24 hours once they review the required paperwork and verify certain financial health metrics. 5. Review and sign the MCA agreement. If approved, carefully go through the final merchant cash advance contract detailing total amount financed, factor rate, holdback percentage, payment frequency. 6. Receive funding. Finally, once signed, the lump sum is wired within 48 hours directly to your business checking account via ACH transfer. While quick, it is smart to explore multiple lender options to find the best rates and payments for your situation before completing these steps. Tips for first-time MCA borrowers. If you're considering a merchant cash advance for the first time, keep these success tips in mind. Start small. Don't take on more than you know your business can handle repaying. Build a track record with an initial lower amount. Use a broker. Broker shop rates save you money. Fees are usually paid by the lender, not you. Review deductions frequently. Log into your processor portal, often to validate accurate holdbacks that adjust downward as the balance is paid. Have an attorney review the agreement. While not required, it is helpful to fully understand legal terms and liability. Explore alternatives concurrently. Apply to online lenders and community banks to compare all options. Designate funds properly. Be disciplined about allocating capital injections solely to stated business needs, not personal expenses. Finding the right lender for you. With the rapid growth in alternative online lending, there are now thousands of potential funding partners vying for your business. The key is identifying legitimate providers that align with your needs and values. Here are top qualities to look for. Easy application process, user-friendly portal, intuitive questionnaires, helpful support staff, transparent terms, clearly stated interest rates, no hidden fees in the fine print, strong security protections, meets all PCI compliance and data privacy standards, positive reputation, 4-star ratings or higher, largely positive customer reviews, reasonable rates, doesn't overcharge but also sustainable as a business relationship focus, takes time to understand your business goals and cash flow dynamics. Doing some due diligence by checking companies on the BBB website and asking fellow entrepreneurs for recommendations helps avoid predatory lenders. Ultimately, finding the right loan broker comes down to trusting your gut instincts. What laws and regulations should I know? While less stringent than conventional bank loans, merchant cash advances still come with regulatory considerations. Most notably, the Federal Trade Commission, FTC, has investigated some predatory small business lending practices in recent years. They identified areas that now see greater enforcement: disclosures, requiring transparency on rates and terms, collections, restricting harassment tactics, product misrepresentation, prohibiting false or misleading statements. Many states also now impose usury caps and enhanced reporting obligations. For example, California's new SB 1231 law demands providers share equivalent APR average MCA term length, percentage of customers reaching full payoff. Working with established industry associations like the Small Business Finance Association ensures you stay on top of the latest compliance developments. Their code of conduct holds members to high ethical standards. Financing considerations for different business structures. When pursuing a same-day business cash advance, the type of legal entity you operate under can impact eligibility requirements and optimal loan amounts. LLC financing. Limited liability companies, LLCs, only require a valid operating agreement to apply for merchant cash advances. Recommended loan sizes typically range from $10,000, $75,000 based on average monthly revenues. S-Corp financing. S-corporations need valid shareholder agreements and articles of incorporation. Their ownership structure poses more complexity, so max advance amounts are often capped at $250,000, $500,000 for stronger S-Corp. Partnership and sole prop financing. As sole proprietors or partnerships, owners also personally guarantee MCA repayment. This results in more conservative approval amounts in the $5,000, $150,000 range based on personal credit strength. Call 888-653-0124 today, or click the link in the description to learn more and share your success story.